Good morning. Welcome to Small Biz Tax Tips, brought to you by Return to Better Muscatine, which is a grant program made available by the Ewing Marion Kauffman Foundation. Your local Muscatine chamber went after some grant funding to be able to bring you educational, content-driven processes and education that's specifically tailored to small businesses in the Muscatine area. Today, we're here to talk to you, and I happen to be Joel Youngs, the Regional Director for the Small Business Development Center, which covers Muscatine County, Scott County, Jackson, and Clinton County. And I work with various chambers in the area, and specifically the Muscatine Chamber, to bring you topics of which today we're going to talk about business taxes. The SBDCs, though, cover more than just tax tips. We talk to you on a confidential basis using an independent outside resource for you at no added cost. And the reason why we can say no added cost is because we're paid for by taxpayer-funded dollars. What we do is we provide one-on-one counseling. We also provide workshops such as this. We also do forums. And then we also connect you to other resource partners whenever that's appropriate for your small business needs. Our goal is to support all new and growing businesses in Greater Muscatine. Whether it's going to be a lifestyle business, whether it's going to be a small business, or whether or not it's going to be a high growth business, we're here, and your Muscatine Chamber and the Ewing Kauffman Foundation are here to support you in your business goals. So today, as we said before, we're going to talk about different kinds of business taxes. And there are four major kinds: federal and state income taxes, federal and state payroll taxes, self-employment taxes on your net income, and then there's other kinds of taxes such as property taxes, sales tax, et cetera, et cetera. Today, we're specifically going to be talking, though, about federal and state income tax, because today happens to be April 1st, and we have some very important deadline dates that we want to talk about. The goal for most small businesses are usually to minimize their tax burden, but we want to make you aware that there are exceptions to trying to minimize your tax burden. If you're trying to get a loan, your lender will take a look at what your net profit is. And if that net profit is not sufficient to be able to repay the loan and to be able to support you and your household, it'll be very difficult to get that loan. In addition, if you're going to try to sell your business in the next 3 years, you might want to consider not trying to zero out or minimize your net profit, which minimizes your tax burden, because what you're doing is you're minimizing your chances to have a maximum return on selling your business. You always want to seek accounting and legal advice about your specific situation. The things that we're going to talk about today are generic in nature, but again, we urge you to talk to the professionals who are specifically trained and licensed for those areas of accounting and legal areas. So let's talk about how most small businesses are structured. What they are structured as, the generic term is called flow-through types. Specifically, that means that you'll either be a sole proprietor or a single member LLC, and in which case you're going to file a Schedule C. However, there might be more than just you. And so you could also have as a multi-member LLC or a partnership. Partnership is just two or more people acting together like as sole proprietors coming together and forming a partnership. And that agreement can be either verbally or in written form. By the way, your legal advice probably would be to get something written in form. And then the other way to have multiple members participating in a business is having something called an SCorp. And again, that is an IRS formed entity that merely says that you're going to have some shareholders involved in the business. With an S corporation, you're limited to 99 shareholders, and in which case, if you are an S corp, you're going to be needing to report your taxes, your net income, on the form 1120-S. If you have any shareholders, you need to be also giving them a K1 form. So with that in mind, let's talk about some of those kinds of deductions that you might see on your small business. Big top of mind is mileage. The federal rate for 2021 is 56 cents per business mile. So if you are doing, say, 10,000 business miles a year, guess what? You get to reduce your net income by $5,600. 10,000 times 56 cents is $5,600. You could also have things like depreciation. And what depreciation means is you buy something that has a useful life of X number of years, and it depends on the kind of equipment that you're buying that will that the IRS will tell you how long you can use to depreciate that. And so what that's doing is it's breaking up that purchase price over a certain period of time. This is another reason why to seek legal or accounting advice, because your accountant, again, keeping in mind, if you're trying to minimize your tax burden, your accountant can help give you advice on how, what kind of depreciation that you might want to take, because there are some exceptions to the depreciation rule called accelerated depreciation. Other kinds of deductions are business occupancy and qualified business income deductions. Again, we're not here to really dig into the weeds of this. We just want to raise your awareness of some various topics, and we invite you to reach out to us, to your accountant, to your lawyer, to ask specific questions about your specific business issues. If you'll notice, we have in the right-hand side of the screen, we also have some other common deductible expenses. And again, not going to get into the weeds. We just want to make you aware that that's available. And if you want to rewatch this presentation and take notes, feel free to do that as well. So let's take a look at some of these tax forms and how they might differ from one another. So if you're a sole proprietorship, you're going to fill out your normal 1040 form. You might have a Schedule A, you might not have a Schedule A if you're able to itemize your taxes. But in addition to that, you're going to need a Schedule C, which is the form that says, hey, I've got business income. And it doesn't really matter what that level of income is. It could be a lot, it could be a little. You're going to want to use a Schedule C. So in the upper left-hand corner of this form, you're just going to put things in there like your name, the name of your business, your address, that kind of stuff. But let's take a look at some of the arrows that give people some problems when they are trying to complete this form. So in the upper left-hand corner or upper right-hand corner is the letter B. It says enter a code from instruction. That arrow, what that means is they want you to enter your 6-digit what's called NAICE code, North American Industrial Classification. So every business has a NAICE code. So let's pretend you're a plumber for a minute. You can Google plumbing NAICE code and up will pop your 6-digit code. That is different than your Social Security, and it's different than your EIN. Your EIN is similar to your personal Social Security number. However, it's a number that's given out by the IRS that is similar to your Social Security number, but is the number identifier for your particular business. So that's what those 3 boxes are in that upper right-hand corner of. The next thing that gives people a little bit of trouble on the left-hand side is item number F. What is your accounting method? 9 times out of 10, you're probably going to be a cash method. However, what that means is you recognize income and expenses as the cash comes in or out, you get billed, or you incur the expenses. Accrual is slightly different. And what that means is it recognizes future income or future expenses. And there are some businesses that do use the accrual method, but keep in mind, again, you're going to want to be talking to your accountant about which method will work best for your particular business. Once you pick that, it's kind of difficult to change. So it can be done, but it is kind of difficult. And we, again, urge you to talk to your accountant about it if you ever need to change your accounting methodology. So let's slide down to the income side, because that's always the good part, is your business income. So the very first line there on that is gross receipt or sales. Basically, anytime somebody says, well, what's your gross? They're talking about how much total money are you taking in on your business? And that's what goes there. Line number 4 may or may not apply to you. So let me give you 2 examples about how you know if you have cost of goods sold or not. Let's pretend you're a restaurant and you sell breakfast. You sell your breakfast for $10, and let's pretend you got a couple eggs, some hash browns, bacon, and toast, right? Well, your income would be $10 for that one breakfast. That would have been on line 1. Your cost of goods sold would have been how much paid for the eggs and the hash browns and the bacon, or whatever materials get used up when you serve that breakfast. So it can also be the napkins that get used up. It could be used, the little ketchup packets that get used up. All of those can add up then to your cost of goods sold. Well, when would you not have cost of goods sold? Well, you might be a service provider. So again, let's say your business is you're giving counseling or advice or something along that nature, where there's no product that you're actually selling that you would have then a cost of goods sold. So you might not have cost of goods sold. Let's pretend you're an insurance agent. Oftentimes there's no cost of goods sold for being an insurance agent, because guess what? You're just sitting down talking to people, and there's no cost of goods that are associated with making an insurance sales, if that makes sense to everybody. So what line number 5 is you take line 1, your gross receipts or sales, and you subtract out your cost of goods sold. And that number then goes on line 5, and that's called your gross profit. Sometimes you might have other kinds of incomes or fuel or tax credit, and that will then get subtracted out as well from line 5, and that goes on line 6, and then that answer then falls to line 7. Most often, again, the majority of business owners that I ever encounter, and I work with about 400 small business owners a year, really don't often do not have anything on line 6. So whatever goes on line 5 usually goes on line 7. So this is the top half of your Schedule C, again, if you're a sole proprietorship. So let's take a look and see what the bottom half of this page looks like. Well, the top part was on income. The bottom part is about expenses. So let's take a look at some issues that often trouble small business owners. The first thing we've highlighted is car and truck expenses. So let's pretend you've got a car or a truck in your business, and you spent $3,000 of repairs on that car or truck. You could put those repairs on line 9. However, when are you not allowed to put those repairs on there? Remember we talked about the mileage deduction, 56 cents per mile. Let's say that vehicle did 10,000 miles of travel for the year, and you decide you want to do the mileage. Well, 10,000 times 56 cents is $5,600. So do you want to put the car payments and the repairs on line 9, or do you want to put the mileage on there? So oftentimes your car payments and your repairs do not add up to as much as what your mileage does. And so you elect to choose your mileage on line 9. However, if your car payments and your repairs do add up to more than your mileage, then that's what you would want to pick there. You are not allowed to choose both. Gives people problems. Other things that we want to talk about that has caused some of my business owners issues is mortgage that are paid to banks. We're not talking about your house mortgage. What we're talking about is if your business owns a building, then the mortgage that your payments that you're paying on that, those can be deducted on your business income. Next, legal and professional services. Sometimes, and we hope that doesn't happen to you, but sometimes the business owners get sued and you might have to hire an attorney to defend yourself. If that happens, guess what? Those legal expenses go there. If you're trying to buy or expand your business, you might want to hire an accountant, or you might want to hire an attorney. Anytime you make those kinds of expenses in the given year, you get to put those expenses down here on line 17. Office expenses. Notice it says in parentheses, see instructions. So this is for people that have a separate office other than their home. We're going to talk about home offices in just a minute, but office expenses can also go, if you do have a separate office other than your home, the expenses in your instructions would go on line 18. Travel and meals. This also can cause some people some problems. It used to be, I'm a little bit older, it used to be that people could wine and dine their clients and write off their meals very easily. The IRS has taken, over the last 30 years, the IRS has taken a very dim view and has a very restricted view on doing that. You get in trouble very easily by trying to put deductible meals down there. I'm not saying you shouldn't do that. I'm just telling you this is a red hot button for audit purposes. If the number that you put down there for deductible meals is very high, it can trigger the audit flags. However, let me tell you a tip or a trick that my small business owners use for travel. Let's say you have a professional conference that's applicable to your industry and you want to attend. And it happens to be, let's say it's in Orlando and you have a couple of children and a significant other, and you want to take them and you want to spend a couple of extra days seeing Disney or whatever attraction is down there at that time. You can still write off your trip there and back and your hotel room. You just can't add in the travel expense and the meal expense for your significant other and your children. But oftentimes people do combine that kind of travel with a family vacation. And so again, we encourage you to talk to your accountant about what you can write off and what you shouldn't be writing off so that you stay out of any audit kind of trouble with the IRS. Last but not least, utilities. What does that mean? Well, that could mean electrical. It could mean gas, like natural gas or propane. It could mean water or sewer bills. It could also mean internet bills, and those things go in the utilities. The last thing that we really want to talk about this page is oftentimes a small business owner might be using their home to run their business out of. So the IRS now has a very simplified method worksheet. If you'll notice it says that in that very last line there, use the simplified method worksheet in the instructions to figure out the amount to enter on line 30. So there's a cap on how much that you can write off on for that expense. However, basically the rule is it's the percentage square foot of your office space that you're using for your home can your mortgage payments that you're spending and your other payments for the upkeep of your house, such as your homeowner's insurance and your utilities, etc., that same percentage of your office space to your home can be written off. But again, it's up to a capped limit, and you want to read the instructions carefully if you're doing it yourself. But again, we encourage you to see and talk to your accountant or your tax preparer. So there are other forms to use if you're not a sole proprietor. One of them is if you're a partnership. Again, partnership is multiple people coming together to run your business, and it can either be under the sole proprietorship umbrella or it could be under the multiple LLC umbrella. So a problem area that people often run into when they try to fill out this 1065 form is, if you'll notice on line 20, it says other deductions, see attach a statement. I can't tell you how many times my clients have forgotten to attach a statement. So make sure you get that statement attached. A K-1 form is used for LLC. And issues on that is the partner share of their self-employment earnings, the partner share of the ordinary business income, the partner share of other information. Oh. So let me go back just a little bit. There we go. So, so again, this K-1 form is going to be used for any kind of partner that you have, whether or not it's a multiple member LLC or a domestic partner. So an S corporation has a slightly different form, and that's called an 1120S. This is a pretty straightforward form. It's very similar to the Schedule C that we've already talked about, so we're really not going to talk about any issues there. But at any point in time, when you have shareholders and you're trying to make a distribution to the shareholders, you also need to have this type of Schedule K form. It's called the 1120IC. So keep in mind that many businesses try to minimize their tax burden. In addition to that, not only do they try to minimize their tax burden, sometimes they don't distribute to the shareholders. So my brother, for an example, has 7 different shareholders with his business. I know that the first 3 years of their business, even though they showed a small net profit, they really didn't do a taxable distribution of those profits. They plowed those profits back into the company. You may want to be doing that, especially if you're in a startup phase. Again, see an accountant, see your tax preparer to get that specific advice that's applicable to your small business. One of the things that we want to talk about is deadlines. You know, we all work to deadlines. We all have a tendency to put things off until the last minute. Here are some very important deadlines for this upcoming year. April 18th, the 15th falls on a weekend. So guess what? You have until April 18th to get your taxes returned in and to pay the tax that's due. Not everybody gets their taxes done in time. So you can request an extension. You also have until April 18th to contribute to any IRA or health savings account, which again factors into minimizing that tax burden. Again, seek professional advice from an accountant or a tax preparer. If you did file an extension, you've got until October the 17th then to get those returns filed. Couple of cautionary notes. If you file for an extension, I've had my business owners forget to pay what they estimate their tax burden is going to be. And if they do that, what will happen is they're going to have extra costs when they do file their taxes, because the IRS is going to say, hey, you should have paid us the tax that you thought you were going to owe. And because you didn't, we're going to charge you penalty. We can charge you penalties. We can charge you interest. Why would you do that to yourself? So now, when would you not do that? What happens if you just don't have the cash to pay? Well, you can call the IRS, start making arrangements. Again, we urge you to seek professional accounting or legal advice to see whether or not that's the right situation for you to do. In the upper right-hand corner in yellow, we've got please don't forget though, just because you're filing your taxes on April 18th, you still have your first quarterly estimated tax payments for what you earned for the first quarter of this year. So that's also due. Today's workshop was brought to you by a Return to Better Muscatine. Again, it's a Kauffman Foundation grant that the Chamber and the City of Muscatine went after to educate you, to make you a better business owner, to make a better community. So there's a website called the Muscatine Smart Start Dashboard that you can go to find further information. You can also contact me. I've got my contact information there. Again, my name's Joel Youngs. If you forget who I am or forget my phone number, feel free to call the Muscatine Chamber. Give Hannah a call. She's the Director of Business Services and Advocacy. Got the phone number there. We got her email there. And we're here to help you be as successful as you want to be on your journey of being a small business owner and being a community member of Muscatine. Thank you so much today for listening and participating in today's workshop. Again, if you've got questions, give me a call, give Hannah a call, send us an email. We're here to help you, and it's not going to cost you anything out of your pocket to do so. So thank you so much.